In today's video, you'll discover how to bank with the savvy of the wealthy and pave your own path to riches. When discussing saving money, we typically refer to two main strategies. 1. Cutting back on expenses, and 2. Depositing your funds into a designated account, such as a bank account. Unless you're stashing bills under a mattress and exclusively using cash for transactions, chances are you already possess a bank account. However, do you grasp the inner workings of your accounts, or whether they're the optimal choices for your financial goals? Contrastingly, affluent individuals are adept at maximizing their earnings through long-term relationships with multiple financial institutions. They might maintain savings with Bank A for its exceptional high-yield savings product, while also utilizing Bank B for its unlimited ATM fee reimbursements. The affluent understand that banks vie to reward and retain their loyal clientele. Thus, they see the value in cultivating relationships with several banks to capitalize on a multitude of insider offers. Why? Well, because the affluent recognize their worth. They aren't entitled without justification. Rather, they strategically position themselves to leverage the benefits offered by various financial institutions, while many of us settle for mere customer status. When a bank enters our purview, affluent individuals recognize that they are the primary revenue generators for the institution. They understand their value to the bank, not in a sentimental we're all family sense, but in a pragmatic, profit-driven manner. Depositing funds into a checking or savings account doesn't simply idle, it becomes a tool for the bank to generate profit, not for the depositor, but for the bank itself. Here's a simplified breakdown of this process. Andrew: hello, bank. Can you hold on to this $20,000 for me? Bank: certainly, Andrew, and in return I'll offer you a modest return for the use of your funds. Andrew: a return. But how exactly are you utilizing my money? Bank: I'm extending loans. I'll lend it to individuals seeking mortgages, charging them an interest rate of 7% or potentially higher for personal or auto loans. Andrew: but the interest accrued benefits you, the bank? Bank: indeed, Andrew, despite it being your capital that I'm leveraging for lending purposes. Andrew: true, but rest assured I'll reclaim my funds when needed. It's legally binding. Bank: agreed, but what's the incentive for me? Bank: well, those enticing returns, naturally, along with this complimentary tote bag. In essence, depositing money into a savings account equates to extending a loan to the bank. The bank, in turn, leverages these funds to extend loans to borrowers, charging them interest. Meanwhile, depositors receive a nominal interest payment as compensation for parking their funds with the bank. Given that banks offer nominal interest rates compared to the substantial interest they charge when lending out deposited funds, they heavily depend on their customers. Recall the branded tote bag your bank distributed. Its cost is outweighed by the profits garnered from your patronage. This tote bag represents part of the acquisition expenses, which banks incur through commercials, influencer partnerships, and marketing blitzes to attract new clientele. Given the hefty initial investment to acquire customers, losing them entails additional expenses in customer acquisition. For affluent individuals, this dynamic is crystal clear. Hence, they meticulously seek out the most advantageous account options and assert their value as customers to deter banks from taking advantage. Aware that banks rely on their patronage for profitability, affluent clients have no qualms about switching institutions when faced with excessive fees. Banking necessitates continually evaluating the benefits. Here are two key principles to adopt for banking success. 1. Banks rely on your inertia. They anticipate your preference for comfort over seeking better options. While lounging on your couch, scrolling through your phone may seem appealing, take advantage of the opportunity to explore other banking institutions. Your initial checking account might have served its purpose, but the financial landscape offers a myriad of alternatives. 2. Banks will exhaust various measures to retain you as a customer. They are inclined to waive late fees or provide complimentary services, recognizing that retaining your patronage outweighs the cost of such gestures. Rather than investing in acquiring new customers, they opt to preserve existing relationships. Need a fee waived or an erroneous charge rectified? Simply inquire. Often it's a straightforward process. As previously mentioned, affluent individuals are unapologetically assertive. This confidence stems from a lifetime of reinforcement, being told they are deserving, competent, and significant. This abundance mindset instills the belief that alternatives abound and opportunities are within reach. Personally, I'm inclined to explore competing offers if my current bank fails to meet my expectations, echoing the sentiment that if one opportunity eludes me, another awaits. Moreover, the ability to assert entitlement stems from having the luxury of time. Affluent individuals can afford to invest not only money but also time and effort. They are wealthy not only in financial resources but also in temporal freedom. Perhaps their wealth is derived from investments, affording them the flexibility to navigate inconveniences and pursue favorable opportunities. Hence, they evade the confines of a conventional work environment with a micromanaging boss, or occupy esteemed white-collar positions offering unparalleled flexibility. However, for those who have navigated life with systemic disadvantages, raised in modest middle-class settings devoid of lavish indulgence and the affirmations of inherent worth that accompany affluence, doubts regarding one's capacity to achieve financial success are inevitable. Conversely, poverty precludes the cultivation of an abundance mindset and diminishes the sense of entitlement, often relegating such notions to realms inhabited by others deemed dissimilar. If you find yourself in this position, I urge you to adopt the mindset of the affluent when engaging with financial institutions. It's incumbent upon your bank to cater to your needs. You are entitled to exemplary service. View your accounts as a team of financial allies, each tasked with a distinct role. As the customer, you are the linchpin, the raison d'etre for their business model. Remember, your bank isn't granting you a favor by facilitating your account. Rather, you are providing them with a virtually interest-free loan every time you deposit funds. Regardless of the deposit's magnitude, your money holds inherent value. Embrace this understanding, exude confidence in your stance, and find comfort in your role. By adopting the mindset of the affluent, you won't solely enrich your bank balance. You'll enrich every facet of your life, an invaluable transformation indeed. Don't hesitate to share this video and subscribe to our channel for more insights. Thank you for watching, and I'll see you in the next video.